QuickBooks Online 2025 Payroll Setup. Get ready and some coffee because we're learning how to save time with QuickBooks Online 2025. Here we are in our QuickBooks Online Get Great Guitars 2025 project file we set up in a prior presentation, continuing to lay down the foundation similar to putting in place the infrastructure of a city before we start building on it for our accounting system, the building blocks being the double entry accounting system, entering transactions with the help and use of forms located under the plus or new button, broken out by cycle, the foundation items, the infrastructure being primarily lists, which can be located under the cog button, lists, primary lists, chart of accounts, and the product and service list. So thus far, we have been entering the data, imagining we had our prior accounting system and entering the beginning balances as of the end of the cutoff date of our prior system, which is 12/31/2024. So we could start the new data as of January 1st, 2025, and we entered all of these beginning balances. Let's take a look at those on our financial statements at this time. Going back on over, I'm going to go to the reports on the left-hand side. And then in the favorites, let's go into the right, the balance sheet, right-click, open up in a new tab. And then the profit and loss, right-click and open up in a new tab. Let's tab to the right, close up the hamburger. I'm going to change the range to a 2-year time frame, 01/01/24 tab, 12/31/25 tab. Select the drop down to see it in years, run it to refresh it. 24 and 25 now side by side, tabbing to the right, closing up the hamburger, same range change, 01/01/24 tab, 12/31/25 tab, selecting the drop down to see it in years, run it to refresh it, and there we have it. Now that process we just did is going to be my standard process typically whenever I'm working in QuickBooks, because I would like to have the balance sheet and income statement open, the two primary reports impacted every time I do a transaction. And then on the left, I typically have another tab where I actually do the data input. So going forward, we'll do that process every time. We'll typically do the data input using the forms. As we enter each form, we will take a look at the impact by jumping over to the balance sheet and the income statement, drilling down on these accounts to the source document so we can both see the construction bottom up and then deconstruct from the end result back down to the source documents. All right, now you can also have the trial balance, by the way, but we'll talk about that more later. The next thing we want to look at of the foundational items is going to be payroll. Now, payroll, I just want to touch in on it. And whenever I touch in on the payroll, we want to point out certain things related to it, because payroll in the United States in particular is going to be like an industry in and of itself oftentimes because of the complication, which is purely caused by government regulation, and the primary regulation being, of course, taxation. So if it wasn't for that, payroll would be very easy. So if you're in another country, you might have, of course, different laws and regulations. So once again, the idea of the double entry accounting system is universal. It's like math, although you're going to be using different currencies. You can learn, if you're not in the United States, you can learn double entry accounting system using what we're doing here, mainly in dollars, and then just convert it to whatever else you're doing. But the problem falls with laws and regulations, the primary laws and regulations impacting bookkeeping being tax law. So in the United States, we have a federal income tax system, so we have to do income taxes, which is the primary reason often small businesses need to do their bookkeeping in the first place, because they need the income statement in order to do their tax preparation. And then the states have their own tax system, which some states will then include a consumption tax, taxing people as we basically bill people as we collect revenue, which is often a tax that might be used, say, in other parts of the world, for example. And then we have our payroll taxes. Now, whenever we think about taxes, just note that there's certain groups of taxes. It's a consumption tax, it's an income tax, it's a payroll tax that are those are general groups. So it's just a question of where you're located and what kind of tax structure is in place in that particular area. So it's kind of useful, in other words, to learn different types of taxes, systems, and then be able to be somewhat flexible on where you are at in terms of which kind of tax system is implemented, is the general idea. So payroll would, of course, be one of the infrastructure things that we need to set up if we have employees, but you might not always have employees when you're dealing with small businesses. So if you're dealing with small businesses, if you're growing as a small business, the question is, if I need more help in the business, how do I get that help? One way is you could take on partners, but you have to be careful of that because then you're going to give them an equity interest sharing in the net income of the partnership, meaning you might have multiple accounts down here for multiple partners splitting the net income according to a partnership agreement, or possibly you incorporate and then own the corporation through shares, or possibly an S corporation or something. You could also then hire you could also take on a contractor. So a contractor would be someone that doesn't that's not an employee. They don't qualify as an employee, but you're paying them to do a specific job versus pulling them in as an employee. Now, if you pull them in as an employee, just note that that's what the government kind of wants to do, right? I'm not saying it's a bad thing to do. I'm just saying from the government standpoint, they want you to have an employee structure because then they could force you to do the withholdings. So that's kind of like if you're thinking about the IRS coming at you, what are they going to try to do? Well, you're going to say, well, they're a contractor, and they're going to try to say, no, they're an employee, and as an employee, you are required to do the withholdings, right? It's your responsibility to not just report a 1099, but to do the withholdings. So then as a business owner, the question is, do I need to pick up employees as I grow, or can I qualify them as contractors? In some cases, that might be easier. Or maybe I take on partnership, in which case I have to basically worry about the equity interest with partners not agreeing with each other and whatnot, which is, of course, a whole problem in and of itself. Now, as a bookkeeper, the question is, what kind of business do I want to be focusing in on? Businesses that don't have payroll at all, possibly smaller businesses then for bookkeeping, or if I take on payroll, how do I want to take on payroll? Do I want to be the one that's actually doing payroll through QuickBooks, or maybe I have a system where I work with third-party payroll providers? This is really important because if you're trying to automate your systems as a bookkeeper, then you might want to try to keep it on a cash-based system to the extent that you can, automating the process with the use of the bank feeds. Payroll is one of the things that's going to throw off that automation process, because if you process payroll through QuickBooks, then you're going to have an accrual component to it that you'll have to deal with. And you're also opening yourself up to more laws and regulations and liability, possibly, in that case as well. So here are the options. You can purchase a step up in payroll. So we talked about this a little bit before, but I just want to touch on it again. That means when you set up the company file, you're going to be setting up the payroll. Now, notice as we set up the company file here, we started it as of the end of the year is where the new company file is going to be in place. With payroll, you really want to do that if at all possible, meaning you don't really want to switch payroll providers or how you're tracking payroll in the middle of the year, right? Because the way payroll works is typically on a calendar year, and there's caps to certain things on payrolls, like the Social Security has a cap on it, federal unemployment tax, FUTA, has a cap on it. So if you start payroll in the middle of the year and transfer from one system to another, you're going to have to somehow pick up the proper data so that you don't accidentally pay more payroll than you should because you're going over the cap. So that means that if you're coming from a prior accounting system and you're starting a new payroll, you would really like to start it as of January of the year. Now, it's possible that sometimes that's not possible. Maybe you had a prior accounting payroll and you got to pull in the payroll as of the middle of the year. Well, then it would still be nice if you could do it as of the quarter, right? Because payroll is reported by quarter, so every 3 months, because that might make your quarterly reporting easier, which is reported on the 941, typically on a quarterly basis. So that's something to really be mindful of with payroll. If you're switching payroll systems, you don't just do it willy-nilly in the middle of the year if you can at all help it. So in our case, we're going to try to do it in January, and then the question is, do I want to level up on and pay for it within QuickBooks, which means I'm going to have to pay more or charge the client to basically pay more, and then we track it within QuickBooks, or we can try to work with third-party payroll providers, the large ones being, and I'm not advertising these providers, these are just the bigger ones, ADP, and then like a Paychex. Now, there's pros and cons of these items because if you buy it within QuickBooks, it's going to cost a little bit more, but possibly be cheaper than a third-party provider, you would think. But it's also going to force you to not be on a cash-based system within QuickBooks as much, because when you process the payroll, it's going to do an accrual component and it's going to make a whole lot more detail in your QuickBooks system. Because as we pull this information into QuickBooks, we're going to need to run reports that deal with all the bureaucratic issues, which is that we have to report to the employees each payroll their gross earnings, their net earnings, and on a check-by-check basis as well as a year-to-date basis. And we're also going to have to see when they hit the caps on particular items so that we can make sure that we're properly calculating the payroll. And that means that the amount of data in QuickBooks is going to get a lot larger when you process payroll, even if you only have a few people that you're processing payroll within. Now, there's some things that make payroll more complicated as well. If you're in different states, then you might be subject to different kind of responsibilities for payroll, and the more services you provide to people, such as benefits, 401k plans or something like that, retirement plans, health insurance, and so on, that adds a lot of complication to the processing of the payroll as well. So those are just things to keep in mind. Some states are more difficult than other states because some states like California like to tax everything. Other states try to be more business friendly and try not to drive out all the business out of their state because they're not like stupid. But if you got nice weather, sunny beaches, and women frolicking on the sand, you could be a little stupid, I guess. Whatever. There's pros and cons. So in any case, to set up the payroll, you can simply, if you didn't set up the payroll when you first bought the file or first set up the file, that's okay. You can always go into the payroll on the left-hand side and then level up on the payroll. So we have the payroll tab here, payroll that goes beyond a paycheck, select what you need, we'll recommend, and so on and so forth. So you can search into it. It's going to be an upsell. Now, we're not going to process the payroll within the QuickBooks system in this practice problem, although we will talk about the payroll as we go through the setup process. And then we have a whole nother course that's dedicated to payroll if you want to dive into that in more detail, because once again, it's kind of a specialty in and of itself. So this would be where we would set it up. Let me just give a quick rundown of your setup options in general as we're thinking about payroll as it's done in like the United States, looking at a flow chart. This is from the QuickBooks desktop, but we're using it just to look at the flow of the forms as we analyze what would happen in QuickBooks Online or any other kind of accounting software, typically because we're just thinking about the cycle of payroll. So if we're processing payroll, what do we have to do? We've got to set up the payroll, which means we have some choices that are somewhat limited based on how payroll is being thought about, right? Which means we can pay people, for example, weekly, bi-weekly, semi-weekly, monthly. Those are the basic payroll periods that we can choose. If we want some other kind of payroll system, like paying as you go or as work is done or whatever like that, those are nice creative systems you can think about, but you can't really fit them into the box of the bureaucracy of payroll, which is part of the problem of bureaucracy, right? It limits the creativity in people coming up with new systems that fit their particular needs. So we typically will use one of those kind of payroll setups. Now, then you can pay people either hourly or you can pay them salary. So if you pay them hourly, you're going to have to track their hours somehow. You could do that within QuickBooks, which has a time tracking, which they might be able to log in on their side and track their own time, which is great. But you can also just have them manually kind of calculate their hours, giving you an Excel worksheet or whatever, another accounting software or something like that that you can use to track the time. Then, of course, we need to process the payroll. Now, when we process the payroll, that's the big transaction that happens monthly or bi-weekly or semi-monthly or monthly, where we're going to give them their earnings less everything that we had to take from them, including federal income taxes at the least. So the bottom line thing that we need to withhold typically is going to be federal income tax, so FIT, federal income tax, Social Security, and Medicare. That's what we take out of their paycheck because the government has forced us to be their collection person if the person is an employee in the United States. We also have our payroll taxes based on the expense of payroll matching Social Security and Medicare, for example. Plus we have federal unemployment tax that we have to deal with. Then you might have state taxes, which also could have state income tax withholdings and others. Depends on the state that you're in, on how complex that would be. And then you might have workers' comp and so on. And then you have voluntary withholdings, which include things like possibly health insurance coverage, 401k plan, or some other kind of retirement plan, which is something that is optional for us as the employer to provide as a service to the employee, which could give benefit to the employee by having a higher limit, for example, on how much they can invest in a retirement plan, and or having a group plan at the least, possibly making it cheaper to buy insurance and that kind of thing. So that means that when I process this, what's going to happen, they're going to get a net check, which is a lot less than what they actually earned because we took all this money out of their paycheck, which we need to pay on their behalf to the government and possibly to the voluntary withholdings as well. That's the accrual component, because that means that the money that I didn't pay them, I have to put into a liability account that then we're going to pay to the government at a later point in time, and I have to increase the liability account by our payroll tax, our portion of Social Security, Medicare, and federal unemployment tax, and possibly state taxes or whatever as well on that side. That's the thing that throws us off from being able to reconcile or being able to be on a cash-based system, because now when I do the bank feeds, I can't just wait till the check clears the bank and do the bank feeds because now I have this accrual component. So I have to do the matching system. Now compare that to like I had an ADP. Let's imagine ADP was the one that's going to deal with all that kind of stuff. They're going to do the withholdings. They're going to deal with the 401k plans, the retirement plans, the amount that's going. They're going to deal with the payroll check stubs that are going to the employees that have to break out by employee, by paycheck, as well as on a year-to-date basis. They deal with all that stuff, and then we just wait till the net check clears the bank. Then we could just record it on a cash-based system using the bank feeds as basically payroll expense when it clears the bank. There's going to be a timing difference, and there could be some categorization differences in terms of when we're going to record something as payroll expense versus payroll tax expense. But those timing differences could then be easily reconciled if you had a good tax preparer or CPA firm at the end of the year, taking into account the tax returns, 941s, 940, as well as the data in QuickBooks. So see how much easier it would be from the bookkeeping standpoint if we had a third party doing that work and had a good CPA firm or ourselves that can just clean up the reporting at the end of the year. So just something to keep in mind. How do we want to be setting that up? And then, of course, we have to pay the liabilities. That means that after we process the payroll on weekly basis, bi-weekly, semi-monthly, or monthly basis, sometime pretty soon after that, we pay the withholdings that we took, their withholdings, federal income tax, Social Security, Medicare, our tax, Social Security, Medicare, and FUTA, and we pay that to the government as well as the voluntary withholdings, and that's going to decrease the liability. So that's going to be the idea. So that's the general cycle. However, on top of that cycle, we of course have to deal with reporting requirements to the government, and that's going to be over here. So we've got the 941 forms. So this is done on a quarterly basis, could be compared to a 1040 for individual income taxes, whereas in a perfect world, the 1040 should not result in a refund or amount due, but rather what should happen is we pay taxes during the year, and then we file the Form 1040 by April 15th of the following year, telling the government how much we earned, how much tax we have on that earning, and then telling them that we already paid them, which in a perfect world, we would pay them the exact amount we owe. Now that can't work for income taxes because it's too complex, and therefore we shoot to overpay the government during the year so that we then get a refund, not because we like getting a refund particularly in and of itself, but because if we undershoot, we'll get hit with penalties and interest. So the point is we're trying not to get the government to hit us with penalties and interest. Avoid getting hit is the game when you're dealing with the government. So the 941s are similar, except we can be more exact, right? So the 941s are now reported typically quarterly. So we report one each quarter, but other than that, it's kind of the same, right? We're going to say this is the Social Security, Medicare, and federal income tax that we withheld and our portion. Here's how much we paid to you for the quarter. Those two should be the same, and therefore the 941 should be just a reporting requirement. This form can be fairly easily generated if everything goes smoothly within QuickBooks if you pay for the QuickBooks setup, or again, this could be something that would be done by ADP or Paychex or whoever your third-party provider would be, which would mean that it would be very easy on the bookkeeping side because we wouldn't have to deal with the 941s. And then the 940 is for federal annual employees annual federal unemployment, or FUTA, which all students like to hear me say FUTA. So we have the FUTA tax, and so that just means it's going to be due yearly, and it's only for the federal unemployment tax, which is usually fairly small, and it's paid by the employer, not by the employee. But still, we have this same kind of annual reconciliation similar to like a Form 1040 for an individual, but it should come out like exact because we're using more of a flat tax kind of calculation, or an easier calculation at least. We, of course, have the W-2s that we've got to give to the employees and to the government. This is us ratting out to the government, but not only ratting out to the government that they earned money so the government can go after them, but also telling the government we did our job, we did what you told us to, we took from them before they even touched it, before they got their grubby little fingers on it. We took their federal income tax, Social Security, and Medicare, and we gave it to you directly, government. Please pat us on the head and allow us to deduct that on our taxes, and don't get mad at us. And then we're going to go to the next tab. We've got the W-4. Now the W-4, when we pick up a new employee, is the form we have to give to the employee in order for them to tell us the information we need, like how many are they married, and what are their withholding status, so that we can properly withhold for federal income taxes. Now, if you have QuickBooks and Payroll Setup, this might be able to be something you can email to them, and they kind of do it on their side, which is really nice, making it a little bit easier. Whereas we used to have to give this form to them and then manually input it into the system. So that's cool. But again, if you had ADP or Paychex, then maybe they do that process for you. And again, that would hopefully be easier if they took care of that. And then we've got the W-3. The W-3 is simply taking all the W-2s and combining them together into one W-3 as though all your employees were one employee and giving that consolidated information. Now, at the end of the year, what's going to happen in payroll is that on the income statement, for example, let's go over here. We're going to have, now I just deleted the income statement, didn't I? What in the world? Let's duplicate this again. And we're going to go down to the reports, and we'll close up the ham boogie, a profit and loss report, and go from 01/01/24 to 12/31/25. I want to see it by year, run it. So imagine if we process this within QuickBooks, what's going to end up happening is as we process the payroll, we're going to have payroll tax expense, we're going to have payroll and payroll expense, and then on the balance sheet, we're going to have the withholdings that may not have yet been paid, called a payroll tax liability, right? And note that we are giving the government the 940s and 941s, reconciling how much we owe the government. So you can imagine the government might double check in an audit, for example, and say, okay, let's check your tax return for your taxes for your business on the Schedule C or whatever other form you have when you file your income taxes, and whatever you deducted for payroll tax and for payroll expense should tie out to or I should be able to at least reconcile it to the quarterly 941s if I add them up, or possibly I can reconcile it to the W-3 form, although it doesn't include the employer portion, right? So that means that like one of the things that we should do when we file the taxes, whether we do this internally or externally, is make sure that we reconcile what we gave to the government on the payroll tax forms to what we're deducting, so that if the government comes after us for one of the biggest expenses, deductions that we got for taxes, payroll, that we can show the reconciliation of what we told them for payroll tax, for the payroll forms, as with our income taxes that we got a deduction for. So we want to, and so notice if you didn't do that, like if you reported wages expenses down here, or even contractor expenses, and the government comes after you and says, hey, look, you got this huge deduction, you didn't report payroll taxes on it. Well, then that's going to be a problem, right? That's how they enforce us, forcing us to be their tax person. And if they were a contractor, they're going to say, well, we want you to prove to us that they're a contractor and not an employee, because we'd rather have them be an employee, because we want to force you to collect our taxes and pay us on their behalf, right? So that means we want to make sure that we have any documentation for contractors to make sure that they qualify as a contractor because they're working by job, as opposed to forcing us to be employees. Now, if this was done by Paychex or an ADP, again, hopefully they would do all that kind of stuff. And what we would have on a cash-based system here is we would just wait till everything clears the bank and just record it as payroll tax, right? And then at the end of the year, we should be able to reconcile the cash-based system we have to the reports that we would get from ADP or Paychex. ADP or Paychex would give us the payroll register. They would give us the 941s, the 940, and the W-3. And we should be able then to say, okay, the payroll expense I have on a cash basis, I need to reconcile that or break it out between payroll expense and payroll tax expense, and possibly adjust it for any accrual component based on the reports we got. And if there's any balance sheet liability that we need to report as of the cutoff date, 12/31, end of the year, then I can adjust the liability based on the reports, right? So that would be the easiest thing from a bookkeeping standpoint if you had a good team to work with, although it might be a little bit more costly because the third-party payroll might be a little bit more costly, right? But that would be the easy thing to do, because then you can be on a cash-based system, in essence, possibly on the bookkeeping side, automating everything, let ADP and Paychex deal with all the tax reporting and withholding and dealing with the 401ks and all that kind of stuff, and then let the CPA firm do the reconciliation properly, breaking out as of the cutoff date, as of the due date of the tax return, payroll expense versus payroll taxes versus any kind of liability, making sure that it lines up and ties out to what we reported to the government with the payroll tax forms 940, 941, W3.